99% of trading content online is all about how to become a trader, how to become profitable, how to get funded, and all of that is fantastic. But today, we're going to take a different approach. We're going to fast forward to our future selves and say, hey, we are already successful. We are already profitable. We are already funded and making money as a trader. So the question is, what's next? How do we use our trading profits to go to the next level, to continue to improve and level up and just get one step closer to making more money and achieving our goals? When I first started making a little bit of money in trading, when I got a taste of what a 2, 3, 4, 5% monthly return could generate for me, I tried to up the ante. I tried to make 10% a month, 15% a month. And of course, as you all know, this led to ruin. And it led me to the realization that in order to make more money, it's not about higher returns. We want to make our lives as easy as possible. So rather than focusing on a larger return, I completely flipped the equation and said, well, what if I could have more capital? If I could continue to make 2, 3% a month, how could I turn that 2 or 3% return into huge amounts of money? And the answer to that is more capital. And so when I first got funded all the way back in 2021, and I finally realized this, the very first thing that I did with my trading profits was I reinvested. Just like a business, and adopting the mindset of a business owner, I wanted to reinvest into the business to grow it. So I would take a portion of my payout and I would reinvest and get more challenges, pass more challenges, and that is what led me to get $400,000 in funded accounts. The question that I like to always ask myself is, how much capital do I need to live off of just a 1% monthly return?
When it comes to trading full-time, 400K, 100K, trading as a significant piece of your side income, there's a few things that you need to know that aren't really shared anywhere else, because there's a lot of...
You see, at the time in 2021, having just a 1% return on a $200,000 account covered all of my bills. That was $2,000. My rent at the time was $900. It was COVID, couldn't go anywhere. And so I think this is a powerful question to ask yourself. Maybe for you, you're an adult, you have kids, you have responsibilities. So maybe you need $5,000 a month. Maybe you need $10,000 a month. But once you know your number, once you know what you'll be comfortable with, ask yourself, how much capital do I need to live off of a 1% return? And that became my North Star. Now that we understand that, of course, just like any other business, we should treat trading like a business and reinvest some of our profits to grow it, I want to look outside of trading. You see, 90% of traders fail. Trading, as we know, is incredibly difficult. And I don't think putting all of our eggs in one basket is necessarily a smart decision. At least for me, it wasn't a smart decision. I would always ask myself, well, what if the market is flat for 2 years? What if no setups occur? I'm not just going to create a new trading strategy that could take years to master, and I don't even know if it could be profitable. So rather than putting all my eggs into one basket and only putting all of my profits into more challenges, I wanted to diversify. So going all the way back to 2021, 2022, once I achieved funding of $400,000 in challenge accounts, in funded challenge accounts, the next question was, well, what can I do to diversify? And for me, the answer to that was my investment accounts. Being in Canada, we have both a TFSA, which is a tax-free savings account, and we have an RRSP, registered retirement savings account. Now, because I wasn't on payroll, because I didn't have a regular job, I couldn't contribute to the RRSP. However, the tax-free savings account, at the time, it was roughly $5,500 a year that you could contribute. Since the age of 18, every year it fluctuates a bit how much you can put in. But basically, I had roughly $45,000 of contribution room, and it's tax-free, so I can invest, I could sell those assets, those stocks, and it's completely tax-free. And so my number one goal once I got funded was to start funneling money into this account to max it out, to have that nest egg, to build up as much of a runway as possible. For those that are stock traders out there and that are interested, this is not financial advice, but I literally invested in only 3 stocks, all of which were ETFs. So the majority went into VFV, which is the Canadian equivalent of just tracking the S&P 500, which I think is the VOO in the US. So the VFV for those Canadians out there. Number 2 was the ZQQ, which tracks the NASDAQ. Again, it's the Canadian equivalent. So a little bit more volatile, but again, you could go back to my Twitter from 2021, 2022. I kept saying, buy the dip, buy the dip, buy the dip. And I think I'm up like 30% on the ZQQ alone. And the last one, I bought a very small amount, but I did buy a little bit of the SCHD. That is a US denominated fund, and it is a dividend fund. So I don't know exactly what they pay, but it is an ETF that tracks a whole bunch of dividend yielding stocks. I hope that makes sense. So fast forward a little bit, and eventually I did max out my TFSA, which was a huge accomplishment for me. Knowing that I had that nest egg, it made my trading better because there was less stress on me needing to get all of those payouts. And so that was really step one, and it was a huge accomplishment when I eventually did that. Once that was maxed out and I had a little bit of more income coming in, I started to dollar cost average my way into the exact same stocks, but in different investment accounts. So unfortunately, it's not tax-free, but again, it's just like any regular investment account. And I continued every month when I could to put a little bit more money into that. Once I had that nest egg and that runway built up and I was able to really reduce the stress that came in trading, the next question was, well, what's the next step? And for me, fortunately, that was the opportunity that I had to start Lark Funding. And so I continued to trade throughout this time, but those profits I invested into starting Lark Funding June 1st of 2022. I truly believe that as a trader, if you are a trader, starting a business is just an absolute must, and it's a complete game changer. It doesn't need to make millions of dollars. It doesn't need to make thousands of dollars. Literally just the experience alone is so valuable, but trading creates so much free time that rather than staring at the charts, for me, putting that energy and that free time into something like a business was a complete game changer. And so really the main point here is to diversify, and I think it's worth considering starting a business of any type, literally anything whatsoever. It can be outside of trading. Sometimes it's even better for it to be outside of trading, but you start a business. Lastly, once Lark Funding had started, I continued to diversify. So I had my trading. Lark Funding was my main focus and still is obviously my number one focus today, but I continued to take any excess income that I had and put it into different investment accounts. So come 2023, I really went deep down the rabbit hole of Bitcoin. I am a huge proponent and believer in Bitcoin. So of course I put a little bit of money into that as well. And over the last 1 to 2 years, I've also looked into real estate. Now, controversial opinion, I do not necessarily believe that buying is better than renting. I literally go back and forth every single day. I spend way too much time real estate sites. I'm just not convinced that with all the phantom costs, the headaches, everything, I'm not convinced that real estate is a great investment. Mostly more for where you live. Perhaps it could be a good investment if it's a rental property, but again, then it comes with a whole bunch of headaches. You have to manage tenants. Are you really going to make more money than if you just invested into stocks? I'm not sure. So a little bit of a controversial opinion there, but it's something again that I have looked into. To summarize all of this, I think the main takeaway of this video, at least for me, the goal was to share what I did with my trading profits rather than just say what you should do, because everybody is different. This is what I did. But the main takeaway is that I eventually learned that trading is not the end goal. It's only a step along your path. We're trading to make money. So once you do make money with trading, I think it's an incredible tool to diversify and put it into other things. Controversial opinion, again, I don't believe in funding personal accounts. Obviously, that's super biased because I own Lark Funding. But even when I was funded, long before Lark Funding even existed, once I was funded, I never traded my personal account anymore. You enter the 10% of traders that receive money, that receive a payout, and you're going to take that money and just plug it right back into the market. To me, that is incredibly risky, but I am super risk averse. You might not be. So that, again, is just my opinion. But the main message of this video is to look outside of trading, to diversify, to use the free time, the incredible free time and freedom that trading offers to do something else, to take that next step, to build something beyond just trading. Trading is an incredible tool, but for me, it was just a stepping stone and it wasn't the complete end. If you made it this far, we appreciate it. We'll see you in the next one. And until then, peace.